Hey guys, Toby Mathis here, and today we're going to be talking about Bitcoin and cryptocurrencies in general. What is it? How do you use it? What's going on in that realm? Because there is kind of this mystique about it, because it's not like gold where you can put it in your safe, or you could use it for other things besides using it as a means to transfer uh, barter or monies from one party to another. It's a little bit different than gold and silver. It's kind of like an electronic version where you don't actually have the physical item. It's all in the ether out there. It's all blockchain. So it's basically a series of computer programs, which makes it secure. But it also adds this element of misunderstanding and kind of a magical allure about it, which makes a lot of tech folks like Elon Musk so enamored with it because it isn't like currencies that are backed up by a government. It's completely decentralized. And the value is based on, hey, we decide it's worth this much. So, how does it get its value? Well, there's only so much of it. There's going to be a total 21 million Bitcoin in the world. I think we're somewhere between 18 and 19 million being mined right now. They mine about 6.25 Bitcoin every 10 minutes. And that's people doing the mathematical formula to put it into existence. And they call that mining. And that's what pushes up its value. We also have a depletion, and the depletion occurs by people losing it. It's stored in basically an e-wallet, and sometimes people put it on a cold drive, or they'll put it on a physical drive, so there's no name to it, but it exists on that particular USB drive. And if you lose that USB drive, gone. Or if you lose your password, gone. So already there's estimates that 2 to 3 million Bitcoin have already been lost. And when you have a total of 21 that'll ever be mined, and we are about 3 million Bitcoin away from running out, or reaching its total amount of Bitcoin that will be mined, that's what's pushing this value up. Now, there's a misunderstanding about when this mining will achieve full extraction of all the Bitcoins that are out there. And you have to understand that I think it's every 4 years it halves, meaning that right now we're mining a little bit over 6 Bitcoins per every 10 minutes. And that's going to go to 3, then it'll go to 1.5, and then it'll keep dropping down, which means the number of Bitcoin, the actual date that all the Bitcoins will be mined is somewhere out there. And I think it's 2140. It's a long time from now. It's more than 100 years away. And that's just kind of because of the halving and the math and the way it works out is you're getting less and less and less, but that drives their value up higher and higher, higher. And that's what's been going on with Bitcoin. So here's the reality for investors. It doesn't fit in the realm of a dividend stock or securities where we have a company backing it up. This literally runs, you and I decide what this medium is worth, and we believe it has value, therefore it does. There's nothing that really backs up Bitcoin. There's not a government that backs it up. It's computer, and we decide this is a medium that we're going to use, and this is how much we decide it's worth, which makes it very, very volatile. It's not tied to anything that we can point at and say this is why it's worth this. Um, Frankly, that's the U.S. dollar to a certain extent, right? There's a lot of arguments that it's not tied to anything, and the Fed likes to make it, and it's really in loan. Like you have all these things that the people that read the Creature from Jekyll Island and they look at it and say that this is all fiat. This is all because we decide, and that's absolutely true. There's a lot of this that comes into play that, hey, we believe that these things are worth this, and therefore they are, and it's no different in the cryptocurrency realm. What's important to note right now is that there's more and more buy-in from institutions. There's more and more buy-in from retailers to allow it to be used as a medium, like PayPal's on board. Tesla, you could buy a Tesla with a Bitcoin. You're looking at Home Depot. You're looking at some of the larger retailers are starting to realize we really want to take this in. I know Overstock, for example, will allow Bitcoin to be used, but out of a $2 billion company, you're talking about maybe 5 million a year being used, purchases from Bitcoin. So it's not a huge chunk, but they're starting to accept it, and that's one of the big hurdles for people using Bitcoin is that it is a little bit clunky when you go to actually use it to sell, and there's tax implications to using it to buy things. So, for example, Bitcoin for tax purposes is treated as a capital asset, meaning that it's not really currency. So, if I use a dollar, I don't have to worry about capital gains on that dollar. If I use a Bitcoin, I have to worry about capital gains on the sale of that Bitcoin to turn it into US dollars. Hope that makes sense. Like if I have this mug here and I'm going to use it to, mm, and I want to exchange it into cash, I have to sell that mug. And if I'm selling it, like right now, Bitcoin's around $58,000 per Bitcoin. If I sell a Bitcoin and I bought it for 8 and now I'm selling it for 58, I have $50,000 of capital gains, even though I'm using that $58,000 to buy myself a car, right? There's actually a taxable transaction, unlike dollars that as they go in more value, I'm just spending them. So there's an element of taxation that doesn't exist with regular dollars that we have to be aware of. Now, because it again, this is a volatile deal. Like we're talking about, I think it doubled this year. It's gone up and it went way down. I remember when it hit 20 and then it dropped down below 10. And now it's back up over 50, 58. It might be going up higher. There's people that think it's going to be worth 100,000, 150 million. It's all over the place because again, there's only so much of it that's going to be mined, and there's only so much of it that's ever going to exist. And there's people that just are going to sit on it. It's just going to jam up the value, and it makes it again kind of clunky because when you start buying things with it, you're buying with 0.000021. Hey, I can't go buy a loaf of bread with it easily yet. That may switch. So where does it sit in your investments? So this is what I tell people. I like to use a 30-30-30-10 rule, meaning that I want 10% of my net worth in cash or cash equivalents. I want 30% in income producing stocks and equities, ETFs, you name it. I want it to be producing income on those. If I'm an active trader, I may use that part of that 30% to do trading and options and things like that. If I'm aggressive in that realm, I'm going to take 30% of my net worth and have it in real estate or real estate equivalents. That's REITs, that's private placements, that's single family, multifamily, duplex, triplex, quadplex, whatever it is. Like if I want an apartment building, it's in that 30. And then the last 30 is managed money, stuff that I am not in direct control of when it comes to investing. I want to have professionals, and I'm either mirroring somebody's accounts or I'm giving it to somebody who's a manager and I'm paying them to manage that portfolio. I'm not doing like a mutual fund where they're going to charge me on average it's between 4.8 and 5.8%. And don't I know that you're going to go look at it and say, no, it says it's 1.5 or 2%. That's not all the cost. You have soft dollar costs, you have the cash leg, you have management fees. They're not equating. There's a whole bunch of stuff that's baked into that cake that says the actual cost is closer to 4.8 to 5.8. So I'm not talking about that. I'm talking about paying like a fiduciary less than 1%, 1% or less, and they start managing investments. And they may put you into ETFs or things where you're exposed to some cryptocurrency. On the real estate side, you're going to have no cryptocurrency. On the dividend paying stock side or trading, you're going to have very little. Like you could have an ETF again where there's some in, but it's really minor. Where I see Bitcoin really fitting in with people is in their cash or cash equivalents. That's where you do your gold, silver, platinum. That's where you do your US dollars. This is stuff that you can convert into cash fairly easily. And, even though it's a little bit clunky, you can still convert Bitcoin into cash fairly quickly nowadays, for sure. And especially if they start allowing it, again, PayPal and other retailers, if they make it easy, you'll be able to do it. But even through like a Coinbase or some of these exchanges, it's actually pretty quick. And that's where it might sit. And so I would say maximum 2 to 3% of your net worth would be exposed to into the cryptocurrencies. And you better have a stomach for it because these things go, they're pretty volatile still. So if you're one of those people that gets freaked out if something moves 5 or 6% in a month, like that, that is craziness, then you probably want to stay away from that. If you're looking at it saying, hey, you know what, I'm in it for the long haul. I'm not going to be forced to sell my crypto at any time. I don't have to worry about paying bills with it. And I can hold on to it and I can stomach if it goes through a downturn again, then crypto's your friend because it went up just astronomically. I had friends mining it at 300 bucks. I'm sure you all have that story of somebody, somebody overseas. A lot of the military guys were doing the Bitcoin and they had it on a USB drive. Then they realized that they're worth a fortune now. Like it's pretty funny. There were some awards points that were paid in Bitcoin. You get two or three Bitcoins when it was worth nothing, and now and now it's worth $50,000 a coin, more than $50,000 a coin. Now that can come back and bite you too. You buy something, and let's say you buy a car and I shouldn't say you were going to return a car, but let's say you bought something and you ended up returning it, and there's so much volatility that Bitcoin's dropped 20% since you purchased it, and now you're exchanging it. They're not going to give you back like if you paid for it with a fraction like point 0.1 Bitcoin. They're not going to give you point 0.1 Bitcoin back. They're going to give you point 0.08 or point 0.07 if it's dropped. There's that too. You're not just getting US dollars back, right? You're converted it into US dollars. They're going to give you that back, and its buying power is going to be less Bitcoin because technically, when you're buying something, you're selling your Bitcoin to convert it into US dollars. Then you're using US dollars to acquire. And if they give you back those US dollars and Bitcoin's more expensive now or less expensive now, it'll change that transaction. So I hope this helped you get a better idea. I didn't dive into all the blockchain and what it is, although it is pretty interesting the way all that stuff works. Because frankly, it's not going to really matter to 99% of you. What you're looking at and saying, do I need to have Bitcoin? I mean, like you can't walk into a store without hearing somebody talking about it. If you're in a restaurant, you're going to overhear somebody talking about Bitcoin. And there's people very passionate about it. There's people completely freaked out about it, and there's people like Munger with Warren Buffett who think it's a big turd. In fact, he said as long as people are going to be buying turds, there's going to be people selling turds. And you look at it going, whoa, because there's nothing that really backs up its value. If I own a stock in a company, I know what that company's doing. It has actual assets. Even if that company shut down, it could sell off those assets. And this is not the case with Bitcoin. It could, in theory, go all the way back down to zero. You could lose everything. And, frankly, in all investments, there's a degree of risk. And I think you just have to have a higher risk tolerance to play around with things like Bitcoin. That said, it still has a place in most people's portfolios. You shouldn't ignore it. You should get to understand it. And then if you accept the risks, maybe it's something that you actually end up owning.